You guys have been asking for a forecast on SoFi stock for some time. So let's go ahead, jump right into it as we deliver exactly what you guys are looking for. First, starting off before we talk about 2025 numbers, we have all of the information going back to 2018 to reference whenever looking forward. Okay. This goes all the way down to net income and beyond. However, for 2025, we're still missing 2 quarters. We have some pretty good insight into September. And in fact, I'm actually looking at it being quite conservative right here, as I do think that there's going to be over 900,000 new member ads in the quarter based on website traffic and app download data. But what we end up seeing is that I think we're going to see about 3.45 million new ads in the year of 2025. This is going to lead to 34% new members year over year and adding roughly about 5 million new products at a 1.46 times new products per member. Okay. New Galileo accounts roughly coming in at 9 million, not like 2024 or even 2021, we had 40 million new accounts on Galileo. Now it's probably going to be about 9 million or about 5% growth. Now, revenue, 3.5 million is what, or sorry, 3.5 billion is what I'm expecting, a growth of 31.6%, re-accelerating that growth from 2026. With all of this broken down, I'm not going to break down this. You guys can just take a look. A lot of it's going to be in financial services and still lots of growth in lending, but you're going to see how that sort of weans off a little bit as we talk more about where the growth in the future is going to look like. Because as you see, I have some expectations for 2026 as well. For adjusted EBITDA, I think we're just going to pass the $1 billion mark this year with $443 million in net income, leading to about a 12% margin or 95% growth year over year. And then an EPS of 38 cents, assuming 1.256 billion shares outstanding. Now, if we go ahead and take a look for 2026, I'm also assuming 4.4, meaning 1.1 million new member ads per quarter, which will lead to 32% member growth, 36% product growth as the products per member will increase to 1.5 times. These are not just my assumptions. These are the assumptions of management, okay? As you can see, Anthony Noto has wanted between now and 2030 to get to 50 million members. Okay, so these are the assumptions that I'm going off of. He also says 3 products per user. Okay, I don't know how clear that's going to be. They also talked about a re-acceleration of growth in 2026. I'm going to take their word on it, but not be overly aggressive. So roughly about a 13% growth. And then whenever it comes to technology revenue, getting to just over 20%. Now, on lending, I think it's going to be 25%. Rates are coming down in 2026. I think it's going to be extremely strong for them, getting really heavily into home loans. And then for financial services, seeing great growth, but nothing like we've seen before at 44%. Okay. Still amazing, but not quite like what we've seen before. Before I get into all the multiples and where this stock leads to, we'll talk about that in a minute. But I've also prepared something else for you guys. And the further we go out, realize that the accuracy of these predictions are going to get worse and worse. But I ended up breaking out what Anthony Noto is essentially assuming going all the way till 2030. In order for him to hit that 50 million member growth rate by 2030, which by the way, he said Q2 of 2030, this is assuming end of year 2030. Then he also said 3 products per user. We're currently holding at 1.9. I didn't even bring it up to 2 products per user because I wanted to be that conservative. For Galileo accounts, I stopped the growth at 30 million, which is lower than what they've seen previously at 40 million in 2021. And then whenever we look at revenue per product, which is how I break out how much we're going to gain, I kept it extremely flat, going from 85 to 90, 91, 92, and then stopping at 93, assuming that we will continue to make more as we lean more into lending products like the loan platform business for home loans, student loans, and personal loans. Those actually fall under financial services. So there's going to be a lot of growth there. But especially if we get to 3 products per user, there's going to be a lot of new users that come in at lower FICO scores, lower incomes than what we currently see today. So that actually might be a drawdown in average revenue per user, but hopefully with the mass amount, like they talked about getting financial services products like invest in checkings and all of these things to twice as high as they are today. So going to about 160 plus per product. So me only picking 90 plus is me being extremely conservative and assuming that they are going down range to lower and lower members. Lending, I actually continued to decrease it. This was in the 800s in 2022, then 740, 700 for this quarter, and I held that 700 for the rest of 2030. It's very hard to understand the macro going out 6 months out, let alone going 5.5 years out. Okay. So keep in mind how conservative we need to be. And by the way, this is a bull case. This is a bull case. So we're still being aggressive while pricing in a little bit of conservatism. Okay. Galileo, I did increase the amount per customer going forward, but that was also based on the assumptions that the big, hairy, audacious goal that Anthony Noto has talked about, where he talks about bringing in more payment rails and doing more services for other financial institutions that are currently, they're not a part of that at all right now. So almost a new business segment. So how did I increase that or assume some level of new segment growth in SoFi Technologies? Well, I did that by increasing the technology revenue just slightly on a per account basis. Okay. By the way, this is also not including any sort of, SMB banking or insurance products or any of these things, which Anthony Noto has also talked about him wanting to get involved with as well. I did not include that. I did include the adjusted EBITDA long-term range that many analysts have put out, including Devin Ryan, who's the highest rated analyst that covers SoFi, that said by 2030, they could see the EBITDA margin get up to roughly 40%. So I did put that in, as well as, roughly conservative 25% net income margin, which I actually think will be just slightly better because I don't think that stock-based compensation and these other expenses will climb as fast as the other operating margins that SoFi needs to operate their business. So I put a 25% margin, which is still showing significant growth. So although we're seeing 95% growth this year, I expect roughly 92 or so percent growth next year, 66 cents of EPS, followed by 97 cents the year after that, $1.42, $1.96, and then $2.66. Now, if you guys see underneath this, and we can just spoil this, many of the premium fintechs that are in this similar space trade between 30 to 40x on a PE basis. Premium fintechs, okay? We're not talking about banks here, fintechs. Whenever you're looking at the hyper bullish fintechs, it's roughly about 50 to 60, okay? That's sort of the earlier days whenever they're growing at 90+% rates. But even a company that's able to hold roughly about a 30 to 40% growth rate, it's probably somewhere between these two on an EPS growth basis. Okay. Now, if you were to look at that from an earnings multiple going forward between 2025, which actually based on this EPS assumes a $15 price target and a $19 price target, but it's not looking into the future. Knowing that next year is also probably going to double EPS. That's why people are paying a lot today for future earnings, is because the earnings are going to be very, very fast. Now, usually analysts will price in some sort of a discount rate because, we're not going to pay $100 for this stock today for it to be worth that 5.5 years later. So what do we pay today in order for a stock that could potentially grow? And mind you, these are aggressive targets. I mean, SoFi has not proven itself that it can end up getting to 50 million members. I don't think that that's quite justified right now. But Anthony Noto has also not said anything for him to lose my credibility. I mean, every long-term target and thing that he's said about SoFi has come true, aside from the technology platform. That, to be fair, has underperformed SoFi's guidance. But then the financial services and lending have overperformed. So it's actually still done very well comparatively to what they assumed in their mid to long-term guidance. And then also to account for that, I only did 2 products per user, not 3, which is his assumption. Okay. So being extremely conservative and cutting it down by, roughly 33% or 50%. So let's include that discount rate. Whenever we look, and you guys can decide. So I'm looking at a 40 times earnings multiple and a 50 times earnings multiple. If we're being more conservative, I still do think that a 40 times earnings multiple on SoFi, if it's continuously growing by 30 to 40% by 2030, would be extremely bullish. That would be one of the best fintechs or financial institutions that have ever been around. Now, that's going to be extremely hard to get there. Okay. But then with that, you can assume a pretty hefty discount rate to assume, that things might go wrong or that there's macro changes or something along these lines. Now, many Wall Street analysts put roughly a 13% discount rate on SoFi. Okay. So this is where they place it. However, there's not anyone that's putting out a $55 price target on SoFi because they are not assuming anything along these lines for future growth. The analysts that have put out targets for revenue by 2030 say roughly around $8 to $9 billion. So to say 14.4 billion by 2030 is extremely aggressive, but I'm just doing this on a sum of the parts basis. If you believe 50 million members, if you believe 2 products per user, and you're on board with these levels of average revenue per user, what part is going to fail in this assumption that they get to $14.4 billion by 2030? Remember, SoFi has continuously blown away our expectations every single quarter of every year that we've covered it. So to assume that that's going to happen going forward can really reprice what Wall Street is thinking about this company. And by the way, they have completely over the last little bit, where people were putting $8, $9, and $10 price targets on SoFi. Now they're putting, $25, $31 price targets, as Dan Dolev just recently put on. If you were to put a 13% discount rate on SoFi, assuming that they're worth 40x earnings multiple into the future, 5.5 years later, we're looking, or you could spend roughly $55 and say that that's fair value on SoFi today. Currently, it's under 30, meaning that it's underpriced for future growth. If you're assuming that they get to, $2.70 of EPS by 2030. If you want to be extremely conservative, mind you, this is a bull case for their growth rates. You could put a 20% discount rate and say, hey, you know what? If we're being conservative, let's say this stock, we could pay $40 today if they are to end up growing at this rate. Now, remember, Wall Street thinks they're going to get 55 cents of EPS, not even 66. Okay. And by the way, this is below their midpoint of their guidance next year. They think anywhere between 55 to 80 cents. If they end up coming above 80 cents, then my targets are too conservative. But then 96 cents, $1.42, it is hard to hold up these levels of growth rates. So it'll be very interesting to see how this all pans out. Remember, growth at scale to continuously hold up 30%, member growth is just insanity. I don't even understand how they're going to do this, but I'm past the point of questioning Anthony Noto because he's proved me wrong every time. Every quarter, even my own estimates of what they're going to put up in their numbers is shy. Now, if you think that they're going to continue to hold up an unbelievable growth rate by 2030, meaning a lot less risk revenue and more fee-based revenue, almost a payments giant where they're completely international, bringing in users all around the world, have an amazing business, you could see them getting a 50 times earnings multiple in the future, growing at 30, 40+% rates, and having a discount rate of roughly 20% puts you at a $50 price target today, or even lower, maybe even an $80 price target if people are being really aggressive. So anywhere between $39 to $40, if you assume that these are the numbers that SoFi is going to see, then it's absolutely undervalued still today at $28 a share as of the time of recording this video. Ladies and gentlemen, this is my bull case on SoFi. This is what I continuously look at this company and go, you know what? There is a lot of execution left to go. It's not going to be perfect. I'm sure there's going to be macro headaches between now and this 2030 target that I've put out. But if Anthony Noto can do this, if he actually does end up, becoming one of the largest financial institutions, a top 15 tech company, if he creates new payment rails and creates customers that go in to get between 3 and 5 new products per person, then I'm going to look shy on these targets by 2030. That he's going to prove everyone wrong and become an absolute giant in the financial industry. Hopefully, for our sake, that is the case.